Good afternoon, everyone. I think our session is between the lunch and and we should start soon so that we can wrap up soon as well. So thank you so much for joining. The session is Green Finance and Climate Innovation. We're going to talk about what's happening in the green finance sector today and what climate innovations are needed to take it further in terms of enable more and more clean finance in India, right? So we have esteemed panelists with us. We have Mr. Ganguly from SatSure, Mr. Sanjeev Rohilla from NABARD, Mr. Dharmesh Patel from PropLegit, Ms. Prema Jaiswal from, from Caspian, Mr. Prasanna from NABCONS, and Mr. Vivekanandhan from Samunnati Finance. So we're just trying to, in the next 40 minutes, we'll discover more in terms of what each of them is doing in green finance and how we can enable climate innovation to actually enable climate finance in India, specifically rural India. So we'll start with Mr. Rohilla. Sir, NABARD is doing climate finance since ages. It's not new for NABARD. But we are taking some foray into climate finance. We are taking some steps in newer areas in climate finance, newer segments, newer sectors. And a lot of innovation is happening in NABARD in terms of how you foresee climate finance. Specifically, you have the first green taxonomy in India. You have the digital tool platform, DICRA. So you're doing a lot of work in that space also to ensure that climate finance has a new face and climate finance is reaching to rural India in an effective manner. So if you can tell us more about the innovations that you're doing in this space and what kind of expectations you have from the market to actually scale it further in India.
Thank you. So I think a lot of people on the stage, they're hardly in space actually to sit, and I get a cue from that. I should be very quick. So climate finance is something which is new for NABARD in the sense that we have not funded climate mitigation so far. We have funded infrastructure. Some of it was climate friendly that we have handled. But funding an Adani or a JSW or a Tata for a solar, wind, EV logistics, etc., that's a new thing for us. We have got loan book of around $1 billion today, and we will like to close it at 2.5 or so by the end of this year. What I'm saying is with mitigation, there is a clear pathway. Corporates smell money. There's a wonderful policy framework in place in the form of subsidies, tax reliefs, etc., etc. Things are moving at a very good pace. We should be meeting 500 gigawatts very much, I think, before the due date. That leaves adaptation finance. And that's had been a huge worry for NABARD because adaptation finance is something which nobody's looking at, if you ask me. Even globally, the figures which we see is that mitigation finance has been touched around $2 trillion already, whereas adaptation is just barely crossed $75 billion, which is a sad state of affairs. So adaptation finance is something which would need policy support again. And for that, NABARD has come up with a product called NABARD Green Lending Facility, NGLF, which is one of the most flexible credit products in the climate space. We can fund a startup with a green technology. We can fund SatSure for instance, and we can fund Andhra or Telangana government's 10,000 crore adaptation projects if they have. So it's a wonderful credit innovation. It needs blending now, and that is a huge challenge in front of us. We are looking for multilaterals to come forward, a World Bank, an ADB, to come forward and make blended finance really truly meaningful. Otherwise, blended finance is such a crazy concept. I've got people coming to me with 7 to 8 streams, which is such a fairyland, Things don't happen like blending is normally 2 or 3 guys coming together. So that is something which we want to work on. NABARD has also set up NABARD Carbon Fund, which is the only such fund in the country today, wherein we are trying to support carbon developers. We have got a NABARD Green Impact Fund, 1,000 crore fund NABARD has set up with its own funding to support state governments in adaptation projects by subventing their cost of funds. So these are the initiatives which we have taken.
So I want to ask a follow-up question there, but just quickly, if you can respond, what is missing in the innovation space where you really think that if this innovation can take place, can help NABARD further to take, green finance at a larger scale?
Ankit, I'll be honest with you. What is missing really is intent. All right. I mean, India has enough liquidity in the system. Technology is there. We've got amazing people I meet every day. Is the intent at the policy level framework? How serious are we about adaptation? Does it really burn me at night when I think of the fact that 10 years from now this jungle won't be there, or that these farmers need to move from X crop to Y crop, or in 5 years down the line they're going to be running into some rough weather? That intent, that is something which, if we are clear about that, then automatically you will start funding that intent. Intent is missing. Nothing else.
Thank you, sir. I'll move over to Ms. Prema. You're doing investments in MSMEs since ages. You're utilizing a lot of credit products, innovative credit products in the market. Risk analytics models are there. So what do you think is moving good in this MSMEs finance space? And what are some of the challenges which are still holding you back to enable green finance in rural India? So if I have to take a bit more take over there in terms of green finance, specifically for rural India, how do you see that flowing? And what are still required, some of the measures over there?
Thanks, Ankit. I think both finance is a challenge and financing is a challenge. Finance is a challenge was spoken very briefly, but all the points covered by Mr. Rohilla already. In terms of funding lines availability today in the country is still not adequate for the amount of demand that is required. It could be intent, it could be pure taxonomy. I think we just come up with this, that the country would not have the taxonomy for green bonds. In fact, internationally also, if you look at the, I think the green bond market is about 6% only. Okay. So even there, of course, the world is looking at India right now to solve for a lot of its problem because of both we are geographically placed very well, by population we are placed very well, by climatically conditions we are placed very well, which means that there's a lot of opportunity. At the same time, I think if you come to financing and again, adaptation is still some away. I'm from the field. If I talk, it's still mitigation which is running. There also, the availability of credit is mostly domestically fueled. International fuel money has still not reached India adequately. Of course, which means that if the home sets some standards and benchmarks, it will be possibility of doing it further. Now, if I go, this is on the finance side. If I go to the financing part of it, I don't see that the market with defined products is available. It could be multi-level issues right now. One thing that we are aware of is that the models are still in a very nascent stage. They have not reached out adequately that a funder of size of probably a NABARD size or a Caspian size or a black soil capital where I'm working currently is ready. We are still piloting all of that. A standard overall product availability is still not 100% available for multiple reasons. One of them is also that there is no adequate credit worthiness data that could be underwritten for all of this. At black soil, what we are still doing is that we're trying to create models of this nature with the available partnerships that we do, limited partnerships, of course, and create our own internal models and then replicate it to other companies. Of course, solar is the most loved product when it comes to climate thought process for all of us. Next loved product is EV. Thanks to government push that the subsidies and the taxations are helping it. But these are the models that we also are developing. Okay, but very interesting some of the projects, and I want to bring out one of them here is that we're in Odisha, where we're using one of the program. It was a IIT Bhubaneswar funded incubated program, and we tied up with them a small ticket size backed by a small grant that we had, and their rural electrification was happening. And the innovation, I just take one point here and say that there the company innovated of creating, I think, 0.5 HP solar pumps. It was getting little funded from the government also, and that helped us to then go fund the company, and eventually we are creating data that tomorrow we'll be able to provide all of this. So problems, if you ask, is finance and financing. Within financing, no model, data, which jitters us from providing, and scalability of that model. But having said this, I think this is definitely a solvable problem if the data integrity could be resolved for all of us.
Thank you. Similar question, Vivekanandhan. You're also trying to work with FPOs. You're also trying to lend to FPOs, and you have sort of tried to do innovation in this space a lot in terms of how you can reach to FPOs and how you can enable financing to those FPOs. So what is your mantra in terms of innovation that is enabling you to provide capital to them? And what's something that you think that is working in your favor, because of which you are able to increase and provide more and more lending to FPOs?
Thanks, Ankit. At the outset, thanks to IAMA and NABARD for inviting Samunnati to be part of this forum. So to answer your question, what we have done so far, we have tried to be a channel between impact investors, be it green, social, impact investors, both from the equity and debt side, and channel them to the FPO sector and the agri MSME sector. We have innovated. For example, we issued India's first green bond from the agriculture sector in December 2024. Prior to that, we have subscribed to 2 tranches of green bond from Symbiotics. So we have made some pioneering efforts on green financing. So our efforts are both from a liquidity perspective, getting more supply and channeling them into the demand side of it, and also try to curate some other demand and access additional capital. But our story so far, we are trying hard to create an incentive for a end borrower who is adopting green practice. So far, we have not been able to do that. And our endeavor continues, wherein we are in a position to go back to the borrower and say, hey, if you're working on a green financing or green climate action activity, we are willing to give you a concession. But since there is no concession given to us from the capital providers, we are not in a position to pass on that incentive to the end borrower. So it's largely a myth. There is no greenium and green discount. But compared to what is happening in solar, if somebody sets up even a rooftop solar or a MSME starting a decarbonization project by installing solar panels, there are a lot of subsidized financing schemes available given by SIDBI and others. I mean, NABARD is working directly with startups on the innovation front. Maybe as a wish list, we also request the DFIs, domestic DFIs. How do we create that incentive for the end borrower? From an NBFC side, we are a private sector player. We are trying hard, but as a domestic DFI, this is a wish list that we have from DFIs like NABARD and SIDBI. How can you create that ecosystem for us so that we can give some incentive to the end borrower?
Vivek, I just want to add to this. Yeah, I just want to add something. You don't be hard on yourself, okay? You are doing a great job. I was in a conference recently in Thailand about rice. Rice is, one of the biggest polluters. There, the government of Thailand is giving 5% additional MSP for sustainable rice, number one. And then they're paying 500 bahts for carbon credits, each farmer, per acre. Now, that is a kind of policy framework. That's when I'm talking about intent, intent is shown over here. So, an NBFC or a DFI cannot move mountains over here. This is going to be a major policy initiative driven by the top. Until that happens, You have to wait for adaptation goals. As simple as that.
Keep asking in such conferences.
Yeah.
I'll keep asking in such conferences so that we're assuming that it'll get heard eventually.
Even green guarantees. There's so many products are required.
See, I think from a like Jayottam said, we have also accessed some guarantee structures. These guarantees are for portfolio guarantees, meaning if we create a green portfolio, nobody knows what is the credit risk involved in it. A typical lender would assume a 2% credit risk, meaning out of my 100 rupees, 2%, 2 rupees might go bad. That's a typical 2 to 3% thumb rule. But when it comes to green financing, especially in agriculture, nobody knows what is the actual risk, what is the credit cost involved for this portfolio. So many of the guarantee providers have helped us to venture without knowing that risk. Similarly, DFIs can also think about giving guarantee structures for wholesale guarantee structures for NBFCs so that our cost of borrowings can come down. What happens is, since in agriculture, even mainstream financing neglects agriculture. There is hardly, if you look at the top 4 banks, number of banks which has agriculture lending vertical, I think only Axis has, or one of them has. So everybody doesn't look at agriculture as a profitable venture, and climate adds one more layer. So if DFIs can give us some wholesale lending guarantee, yeah. It's a wish list. Sorry, I keep asking it.
Thank you. And this moves me to Prasanna sir. You are working with a lot of eminent institutions and you are looking at first loss guarantees, blended finance structures, right? Corporate guarantee structures and all those. So how do you see that guarantee, blended finance, innovations happening in this space, which is unlocking green finance to a certain extent? As we all have heard from the financiers here, it's not been unlocked in its true sense. But how are these innovations helping the sector? And what is your vision in terms of what needs to be done to enable green finance through these innovations? So what's happening and what more needed?
Yeah, so I'll just give some case studies where DFIs are involved in creating that blending finance structure. So I'll start with one good perspective that Amazon forest per square kilometer gives an output of $40,000 per annum. So that's the output per square kilometer of standing forest. So if you calculate the entire asset base of Amazon, it's $3 trillion.
Ecosystem service.
Yeah, and it includes carbon storage, water circulation, biodiversity, and so this is the asset value of $3 trillion, which is 50% more than the retailer who gets the name from the forest. Okay, so this is the perspective. So to restore that forest, a blended finance structure has been formulated. It's called TFFF, like Tropical Forest Restoration Facility, Forever Facility, TFFF. So it's a $125 billion fund, which is 1:4 by in the ratio of sovereign wealth funds and 4 by institutional investors like all philanthropic PSUs and family offices. So this is the structure, and this $125 billion will be invested in emerging market debts. And whatever the fund comes to the fund, like whatever money comes to the fund, they will give $400 per square kilometer to the indigenous communities. And the countries who are participated in that facility, if they limit the deforestation limit to 0.5%, they will also get benefits. That's $400 per square kilometer is the benefit the countries will get. So India is already one of the observers of this fund, and all the countries, like 90% of the tropical countries who have tropical forests, they are. So this is one of the structures, blended finance structure. Another structure which comes to my mind is the FMO SDG fund, which is a $1 billion fund. So coming back to the guarantee, so the normal thing is that $1 of guarantee creates $5 of leverage. But in SDG fund, the fund is structured so well that $1 of guarantee has brought $9 of private investments. So here the FMO takes the first loss guarantee. So DFI FMO as a DFI, they gave $100 million, and so that another $1 billion has been generated. So by institutional investors, there are other structures as well in that fund. There are Class A shares, there are Class B shares, and there is MacArthur Foundation who also gives guarantee. So recently there is a platform where the platform is open to all the guarantee providers and the guarantee receivers. So this is called GGG, Green Growth Group. This is recently found by Climate Bond Initiative. You know that Climate Bond Initiative is one of the pioneers in setting the taxonomies. So these are some of the blended finance structures which are successful and can be emulated by their DFIs. Another point which what DFIs can do, are also doing, that to support a fund, either in terms of reimbursable grant or non-reimbursable grant, so that this fund can help creating the pipeline, the pulling some of the small projects, and so that the risk of the investors is mitigated.
Sure. So in Indian context, I think both of the examples you said are there. So, but Indian context, is there any specific requirements from your perspective that needs to be looked at?
So yeah, if you discuss adaptation finance, data is the key. The normal credit cycle is 2 to 3 years. So the farmer or a small holder, to get that money, it takes a lot of time. So here the role of intermediaries are there, who based upon data, they create some they create some mathematical model, so that they help the smallholder, the investors in getting the some of the projects are off registry, some of the projects are in the pre-issuance stage. That needs to be also monetized. So the intermediaries role is also prominent here, so that they create that bandwidth for the investors, as well as the buyers of carbon credit, as well as the project developers.
Sure. Moving to you, Dharmesh, one of the key aspects when we were discussing earlier was operational efficiency. So you bring the operational efficiency in the whole system. And so what is your innovation in terms of bringing the operational efficiency, which can enable lending to be, in terms of more and more adaptable and reachable to the Indian market, to the rural India? And at the same time, what's your requests from these institutions, like lending institutions, when you come to say that green finance need to be channelized through your solution? So how are you looking at the whole landscape in terms of your solution, and how it is fitting to the overall landscape of green finance, how it is benefiting the lender?
Certainly. Thank you. Thank you for the opportunity as well to the NABARD and everybody else for allowing us to have this. Operational efficiency, as everybody rightly said, there are different problems, but what we solve with the technology is bringing the speed, bringing the accuracy, and bringing the compliance in the whole, this green finance ecosystem. The speed has been the biggest challenge, whether it's a solar loan, whether it's a tractor loan, or whether it's any kind of agri loan. Or I will also add this, which is not part of this, rural, but in the urban side as well. Whenever it's a property or a land is associated with that. And everything revolves around the land and property. So we have brought the technology in place where the current process, the NBFC, banks, it takes, on an average depends on the bank has a good process in place, they'll disburse in 5 to 7 days, or sometimes it's 15 days. So the time it takes to complete the due diligence, to complete the entire decisions making, to do the landing, it's very, very big. And when you talk about billions dollars of loans that you want to disburse, to the farmer who owns less than 2 hectares of a land, it's a bigger problem. It's costly affair for the banks and NBFC. The way we do is we have brought this technology in place where this 15 days to 7 days problem, we do it in 15 minutes where, and the reason why the bank also was taking a time is, land is a state subject. So each state has implemented their land record in their own perspective. It's a fragmented data distributed across district, taluka, village, and a survey number level. And it's keep changing on a daily basis. If state governments change certain policy, it'll change. What we have done is we have collected all this data, we have simplified, we have made it in a way where this data can be available through our API and through our portals, where bank can access and do their due diligence instantly in 15 minutes and complete their initial decisions making, and bring the trust, which is an accuracy is a second point, where now there is no manpower or any human intervention in this process. It is directly coming from the underlying respective government authority to their hand, and it is certified by them at that time. So it's only 15 minutes, or maybe so in some cases we have a 2 minutes time frame. So when you're looking at it, it's just 2 minutes old government registry data, you are looking at it. So you can make that decisions and you can, move that faster. Now, when it comes to compliance, now once you disburse the loan, then you also have a burden to comply, right? Like you want to make sure that you doesn't become an NPA on it, right? So you want to make sure that the owner who is borrowing, it still owns that land. There is no encumbrances and all those stuff. So what we do is we do a continuous monitoring on behalf of this bank and NBFCs on a constantly basis, and we inform them, we alert them so they can take the decisions on a timely basis, and that's how we bring the compliance. RBI has also mandated EWS and RFA, and it is a lot of burden on the bank, and it is an annual audit. Doing millions of loans on a audit year in a March, it's the biggest problem where they have to comply everything, and complete everything in March ending. And they struggle with that. So we bring this technology into their hand, and they are able to do it right now.
So if I have to relate it to a green finance or climate finance specifically, you are saying that it's irrespective of that. Any loan, you are bringing operational efficiency. Within green finance, you may need to have a little bit more integration from a green perspective to understand, classify those loans and take a further assessment from that perspective. But all those APIs can be integrated on your platform and it's easier for you to segregate it. Is that
correct?
Mr. Ganguly, last, but I think you have heard a lot of sentiments around the table, and you also bring a lot of efficiencies from risk management part of it, data analytics part of it. So how do you see that panning out in Indian market today? Also, you are going into outside India. So how do you see that India versus the countries outside India are behaving towards this? And what is the climate finance requirement from the data perspective that you're solving today, which is enabling you to enable banks, NBFCs, and other institutions to actually lend or enable climate finance in Indian markets?
Sure, Ankit. So maybe the second question first. So from an enabler perspective, so we started our journey in 2017. Basically, it's a data science or image processing organization, right? So we started our journey enabling smallholder farmers to get credit right from 2017 to 2020 onwards. And I think a lot of discussion has happened. There's a fairly stable product now, is at our individual plot level, right? Can we create something equivalent to a credit bureau score, which, by the way, gives you an understanding of the intention to pay, right, historically. But can we bring, through remote sensing, through satellite imagery, even through drone, etc., the ability to pay, right? So if imagine there is a farmer who is new to credit, there is no CIBIL or HiMARK score available, right? Such 50 farmers under a farmer producer organizations come together for a, say, solar pump, loan, right? How do you underwrite, right? Where SatSure or basically remote sensing satellite imagery comes into play, for those plots, as long as we are able to get those plots either through geofencing or write the revenue record numbers, right? We and satellite imagery, by the way, also have the ability to go back in the past. Unlike any other technology, we have access to imagery from free imagery right from 2018 onwards, right? So I can go back 3 to 5 years, inspect that particular plot, what has been growing there, what is the profile of the land, what is the productivity of that particular plot, how the yield has been kind of faring at a district level, even whether in last 3 years there have been any flood, drought instances, even last 15 years, right? So those weather data, irrespective of satellite image. So based on these, what the remote sensing organization nowadays are able to create is a score. We call it KATE score, we call it SAT score, a score at a plot level, which can help a lender, a guarantee provider to take a decision on that particular plot. It can also work at a portfolio level. The same monitoring, for example, we are monitoring at a plot or we're discussing at a plot level, right? The same kind of monitoring we are doing every season, Kharif and Rabi season in India, twice a year across 600 districts, 500 to 600 districts, where remote sensing satellite you're scanning. So at a village level, at a district level, even at a state level, we are able to understand how much crop is being grown, how much is harvested, what is the yield, etc. Right? So while for smallholder farmers who maybe we are nudging them to practice say zero tillage, right, from a sustainability perspective, to substitute their lack of credit history, we can rely on remote sensing. At the same time, if we are trying to kind of look at a lender to a large, say, windmill or a solar kind of a project, right? Sir was talking about kind of how fast we can take that decision, right? Without even going to the ground, can we have a basic sense of it, right? Again, a satellite imagery order don't have the capability for any solar or wind project to kind of grossly estimate the viability of it, right? Whether that is suitable, that land area is suitable for solar, that particular plant, how much solar irradiance it's going to receive, whether there is a huge amount of shadow in last 15 years, whether that land had been inundated or not. So these things, as Sir mentioned, through APIs are available. For example, farm level score, it takes 20 seconds to generate in a portal, which organization like us, we maintain, right? Though it takes 6 months of effort to make it ready. Across 11 states, that is live, whether within 20 seconds we can generate a KATE level or a farm level score, right? So both at a smallholder level or even for large sustainable finance level, what we are trying to bring in is kind of speed to market. Of course, we are not saying that you don't need to go to the land, you don't need to do the due diligence at all. But the idea is, how do we kind of substantiate, how do we kind of complement and the entire process, how do we make it faster?
Thank you. So back to you. What is one innovation that you think you are still not able to crack or you are planning in future, and how it can help you enable finance in Indian markets? What is the innovation that you have in mind which you still think that is needed or you want to champion in the next 1 or 2 years?
Well. That's a difficult one. See, it has to do with adaptation. Mitigation, as she also just mentioned, mitigation is on a smooth trail. In adaptation, my innovation will be, and I think I'll come back to Prasanna ji at some point of time or the other professionally, asking NABCONS to work out this for us. I think that missing link is a guarantee fund, Ankit. That something has to make adaptation finance viable and attractive for state governments. That is the missing link in front of us. We have to understand it's a democracy And in all democracies, politicians have their own challenges to deal with. Something which is going to happen 10 years from now may not be an immediate goalpost for a minister today. Accept it. Now, that would mean the central government has to think of allowing, and I hope it happens in my lifetime. The central government should say, okay, if the state government wants to borrow money from a DFI or from a multilateral, then it can exceed that annual borrowing limit by say 0.5%. And then the green taxonomy element comes into it. The state government can breach that limit of borrowing, provided it shows that that last rupee has gone for adaptation and not for operational expenditure of this and that type. So that is one, I think it's a financial innovation. It's possible. There is enough liquidity in the market, and NABARD is willing to work with the state governments and central government. We can have a loan book of 1 lakh crore in a year. That is my belief. I mean, that is a absorption capacity of the system today. Tamil Nadu alone needs 2 lakh crore, for God's sake. Imagine Assam. Imagine a bamboo-based carbon economy for Northeast. We're talking about thousands of crores. These are all viable projects. But carbon on its own cannot be the anchor for viability. Carbon is an add-on for you too. So, innovation for me would be a financial innovation, because that is a missing link in the entire chain.
Thank you, sir. So, Vivekanand, in that aspect, what do you think you can offer as an innovation to banks or DFIs, which can enable them to look at rural India in an effective manner? Because you are connected to the root, you are connected to the ground, you are seeing those innovations happening. What is your bet? Where do you think that you can offer something to these institutions to take climate finance in a larger way?
I think when we think of adaptation, largely adaptation is being discussed as a public finance or a public investment space. From a green taxonomy, climate taxonomy perspective, climate resilient crops, a farmer undertaking a climate resilient crop, be it millet, be it pulses, be it some of the other leguminous crops, these are recognized as climate adaptation activities, and a private finance or a private investment from a farmer can also lead to an adaptation perspective. So what we are offering to different kind of capital provider is this. We are curating the demand, saying that, look, agriculture is a fertile space for climate action. It's the second largest contributor to GHG emissions, but still it doesn't feature in our NDC goals, but for the rightful reasons, because it's linked to rural development and poverty alleviation. So there's no need for us to put the burden of climate action on smallholder farmers. That's a rightful action. Having said that, a lot of financing, supply of capital goes into other sectors, largely energy decarbonization. Energy decarbonization cuts across, it's a lateral function, it will cut across different sectors. So energy decarbonization lever is the biggest absorber of climate finance across the globe, and even so in India. But beyond the energy decarbonization, we want to offer, there are climate mitigation and climate adaptation activities at a farmer level available in the agriculture space. And we have defined it as part of our sustainable finance framework, which is aligned to Green Bond Principle, ICMA Green Bond Principle, and Climate Bond Initiatives, Climate Bond Taxonomy. And we are offering this as a demand side to different supplier of capitals. So that's the innovation that we are trying to do from our side.
And how do you say, Mr. Ganguly, something like this can be supported by SatSure? How do you see SatSure playing a role where there is a finance provider who is trying to do innovation with the aggregation, getting the data, and he is willing to provide he's looking for guarantees which may be provided by NABARD, for example, in future. I'm not talking now. How do you come in and bring this whole thing together as a technology or an analytics company?
Right. I'll try to kind of frame a short story maybe. So imagine there is a farmer producer organization, and again having say 200 or 500 farmer members, out of which 50 of them come together for say any kind of a sustainable maybe growing a agricultural crop. It could be millet, for example. We have been talking about that, right? Now funding can come right from Samunnati or from another lender. From a collaboration perspective, then the guarantee fund at a portfolio level, of course, the guarantee fund may not be feasible for a 50 or 100 farmer member, but Samunnati, an organization like that, may have the capability to pull in large number of such farmers for a portfolio of say millet or say gram, right? Where an organization like SatSure can come in is first. Of course, we discussed about say the historical behavior of those plots or lands or those farmers, irrespective of their credit score. That is one. Post cultivation, where remote sensing also can come into play, is the utilization of fund. Basically, whether that fund is getting utilized, the farmer is growing crop or is diverting to somewhere else. Whether and that may not lead to kind of repayment on time, right? The third aspect where a remote sensing organization can also come into play is kind of risk forecasting or risk monitoring, right? So whether it's a flood risk or there is a drought risk, there is a hailstorm, etc., right? Can we and nowadays increasingly how do we use artificial intelligence to predict this, right? So for example, Rajasthan had in this Kharif has received some unprecedented amount of rains, right? So based on these risk parameters, right? Again, on the collaboration front, can we or can Samunnati bring an insurance company, right? Again, from the insurance perspective, right? What kind of innovation is happening, right? So earlier there used to be, or still now, a very large amount of money, government money, taxpayers' money is getting spent on crop cutting experiments, right? So what government is trying to do since 2023, there is something called YesTech, right? So again, satellite imagery based, drone based, etc. YesTech model, yield estimation model for helping government to identify the yield of a particular crop in a particular district. Without, I won't say without, but limiting the need to go to the ground and doing a crop cutting survey or CCE, right? So through the value chain, a remote sensing company can complement before lending, during the lending, and also from a lender's perspective, say if Samunnati or a bank, SBI has 200 farmer producer organization under their portfolio, and they want to monitor, the head of risk want to monitor, said these 200 villages or 2,000 villages, right, for their risk portfolio. Remote sensing again has the ability to rank those villages in terms of their potential, agricultural potential, also their risk vulnerability, right? Again, using historical data. I think these are all these enablers which remote sensing is fairly able to bring in. Though there is a lot of constraints of, I think imagery resolution is what we're discussing, right? Currently 10-meter resolution imagery is only available without charge. We would definitely urge the government to kind of make, there are imagery available at 5-meter resolution also, right? So that can unlock a lot as well. So I think these are some of the examples where a remote sensing organization can come.
Thank you. And I think Dharmesh ji, if you can add to it just in terms of, you have already solved the problem of operational efficiency, you have already data and APIs, but I think to scale it, you need certain support. What kind of support are you looking for?
Definitely. I guess any innovation takes a lot of time. I mean, PropLegit, for an example, I could say we spent 3 to 4 years of investment, in making sure all of these different 24 states align and set up a systems which is solid. on which all the bank and NBFC can rely. Now we need volumes. Without the volumes, we cannot add further innovations. Just like we've been talking since morning, we have a need, and we have asked from the bank who are already using our platform that, okay, you have done this far, but can you give me what crop has been grown, and consistently on an annual basis that crop has been grown. We have given them some solutions, but they are still not satisfied. We know we can do it, just like joining hands with the SatSure or another provider like that, and no need to re-innovate. We can collaboratively work together, but we both will need the volumes together. And if government or NABARD or other agencies or NBFCs can put some policies, or something in place that can help us. Like, I would say just the agriculture loan itself, just the annual stress check, RBI. If you go and check, I'm talking about, big bank like HDFC, ICIs and all, we work with it. Just for these financial years, still those banks has not 100% in compliance with ASC. The mandates are there, but they are also not able to do it. Again, affordability, volumes does required so that, we can bring that. So I guess, to conclude, if there are some, joining hands type of structure can happen where, we all can come together on the same platform, that will definitely solve, everyone's problem, is I would say.
So, Ms. Prema, your concluding thoughts in terms of what's the innovation? Because with Black Soil, I think you are looking at the global learnings as well, best practices to be coming in Indian markets through you. So, what is that innovation that you think that is you can now experiment with the experience of the Black Soil with you now, and what kind of solutions you're designing to overcome some of the challenges in green finance, specifically the last mile delivery?
I'll just take something which is may not.
Yeah.
I'll just take 10 seconds before I take that answer. May not be a...
Yeah.
Hello, is this audible? Okay, great. Not a very popular thought process, but I think when we all are sitting here and thinking about making changes, somebody has to go on the field and ask what changes they want to the person who's actually going to use that solution. Over the years, in my experience, I have seen how agri has been started being coined as agri-business. I think there is a need for agri entrepreneurs. And there is that mindset change is needed, not just from top to down, but also from down to up. I think they should start demanding for such solutions from us, because they have seen enough in their own understanding and lifetime about how this works or doesn't work. Innovation has been seen millions of years within our farmers, within our people in those living in those villages. They know exactly what kind of solutions can work for them, what kind of best information that they already have. So one of the requirements that, or what we've learned through an experience and experiments, is that we need certain local support where some of these models have to be tested, brought to a stage where it could be funded. Of course, the funding will come at different stages by different kind of lenders. Some Caspian Black Soil will fund certain segment of customers, and then we, then we upgrade them to a place where NABARD can and our other banks can take them, and for more formal banks can take them. But in terms of innovation, if you want, I think the key innovation is involvement. Everybody has to do their own bit. A, and B, partnerships are the only method, in my view, which actually can help achieve that goal, because all of us do not have the mental capability or the understanding of in-depth understanding of any one process. At Caspian Black Soil, what we have done, and I go back to what Sir was mentioning, intent. We have the intent of doing it. So even if it is a small, let's about a 5 crore loan that we have done to a Meghalaya afforestation work that is happening, we just tied up with 2 other partners. We bring in credit, somebody brings in guarantee, somebody understands the local market well, so they bring in their project management and other skills. And there is another person who's looking at the carbon market sellability of, how can voluntary carbon can be sold. So the innovation is everybody with their own bit come to a common, have to have the common intent, and I'm sure the government within your lifespan will support, and we'll be able to do this in a couple of COP35 se pehle.
So, Prasanna sir, any last comments from you in terms of innovation in climate finance, and what should be the focus for innovation in climate finance?
No, my wish list would be an entity which would combine science and the capital stack. So science means, so the nuances of that science. Science means when I, describe science in climate finance perspective, it is, the climate market intelligence, exploring new technology, mainly carbon capture. Because you see the carbon capture, per ton of carbon capture is $300. Vis-a-vis for others, it is, hovering around 30, 40. So this kind of science, some entities should have that science as well as the capital stack. Debt is costly. So he's talking about guarantees, and there are guarantees for various, regions. Guarantee can be also happen for a company not able to raise finance. There is a guarantee for that also. A company not able to raise critical rare earth material, the guarantee can be available for that also. So a company which brings both the capital stack and the science.
Any questions from the audience?
Thank you, panel, for giving very beautiful inputs to all of us. See, the rural entrepreneurship, as you're mentioning, we are ready to deliver something on the social side as well as the entrepreneur side. The important factor, what I am seeing is the cost of capital. The cost of capital is the key issue which is bothering the entrepreneurship. See, even we are talking about renewable energy, where the unit cost is at on the commercial side at 10 rupees in the cities, but still for doing a rooftop, there is no scheme which is not less than 12%, 13%. Or see, for any green finance and climate innovation thing, that is the highest factor, biggest hindrance, which is the key thing. Thank you.
Can I answer this? Yeah.
And one more point is rural innovation also. So somebody from the NABARD can answer.
So I will handle that first point, the cost of capital. So before the advent of HYD, the cost of transaction was, huge. And the stack is the IT stack was there, the Aadhaar, and on that basis, the cost of serving a customer has reduced. So in this space also, capital stack is the main thing which will reduce the cost of capital, because normally people here depend upon the debt. Debt is always costly. So if we structure the projects in such a way that some of the risks are mitigated by, somebody takes that risk, maybe philanthropy guy or some other guy who is well positioned to take that risk. So then the cost of capital will reduce. So normal, plain vanilla model equity debt, this is not going to, reduce the cost of capital. Some, structuring needs to happen at the fund level, at a group level, pulling different organizations, or pulling different concepts, supported by, market intelligence. So this kind of things, the entire ecosystem will bring the cost of capital down.
So do you want to answer the question?
What was the second point?
Rural innovation. What are you?
Rural innovation. So, first of all, NABARD is a DFI. It's a development financial institution. It's got a limited mandate. And I remember we had a Rural Innovation Fund, RIF, under which we had given around 700 technologies we had supported through grant. And then, you can ask me what happened to the 700 innovations. आपने तो 5 लाख 10 लाख दे दिया, उसके बाद क्या हुआ? Could you arrange a bank credit for this guy? Well, I have no answer for that. I'll not be lying over here. We thought our job was to encourage this rural entrepreneur. But your point is, I think, I really have no answer for that. Like, for instance, road. If you look at roads, you have technologies today which can make a road last for 20 years, right? But you have road rebuilt every 6 months in Bombay. Every 6 months, 7 months, you have, again. So it's not that technology doesn't exist. Yeah. So these are questions beyond my brief. Really, I mean, I think that's a very broad generalization. They have not become. I was with Rockefeller Foundation the other day, and they said that the NPAs in climate finance for this smaller is hardly less than 1 or 2%. You'll be surprised to know this. They are saying we are going to develop a guarantee fund of just 60 crores. 60 crore guarantee fund will help them fund 600 crore worth of climate finance. So that's one thing. Secondly, coming back to your interest rate. See, interest rates is again something which has got to do with intent. Why should a solar powered agri pump set not be available to a farmer at 4%? Ask yourself why. If there's an intent, you will give that loan at 4%, right? If a sustainable housing project cannot be at the same par at 9% which I am paying for a housing loan, if he's a villager, he's using paddy straw or some recyclable material, it should be at 4%. Yeah. So these are policy terms, these are intent. Until somebody feels we need to move in that direction, you will not move forward. At our level, we can do this much. Caspian can do something, SatSure can do something, NABARD can do something.
I think in the
cost
rest
of
of time,
capital is a
Yeah.
cost of capital is a function of credit risk also. So unknown will always be costlier as compared to when it becomes known. So right now
for lesser models like you and me, not for government of India, they can take up a deficit financing if they feel the need for it.
Of course, but not everything can get funded through government, and every other grassroots also will have to pick up, start doing their bits. Commercial lenders like us will also have to take that intent and take it forward, make it in a sizable shape that it can go to a government or a DFI and ask them to fund. So it's everybody's role. Road ke liye I am not able to solve right now.
I would like to thank all the panelists. I would like to thank you, the audience. We had a great discussion, and I think the key takeaway for me is the intent to partner, the intent to learn, the intent to innovate. If we all can, we have heard so many, all of you in terms of different innovations that you're trying in this space. I think the intent towards that is to benefit the rural India, is to enable climate finance in India. But I think we need to find more intent within our own self, our own institutions, to say how we can scale it further with partnerships, with support, and with sort of enabling environment creation to more and more innovations to prosper. So I'll take that message with me. Thank you so much.